These days, it's anything but business as usual. That's why working together is more important than ever. AT&T is committed to keeping you connected so you can keep your patients cared for, your customers served, your students inspired, and your employees closer than ever. Our network is resilient. Our people are strong. Our job is to keep your business connected. It's what we've always done. It's what we'll always do.
Good morning and welcome to the Small Business University online brought to you by Small Business Expo. We hope that everyone is staying safe and healthy during this time. Thank you to AT&T Business presenting sponsor. Be sure to check out our webinar schedules. We have great free webinars happening every week. You can find them on smallbusinessuniversity.online. This webinar is being recorded and will be available on our channel within 24 hours. You'll receive an email notification when the recording is. If there are any questions for our presenter, please post them in a public chat and he will get to them at the end of the session. And now I'm thrilled to introduce this webinar presentation with our presenter, Nick. Thank you. Take it away.
Thank you very much. I appreciate that. Good morning, everybody. I see, everybody saying good morning in the chat. Appreciate you spending your morning here with me. 9:15 on the East Coast. If you're, joining us from the West Coast, go back to bed. What are you doing? Way too early. This is being recorded, and we'll make sure that we get it out to you. But I do appreciate you being on. Today, we're going to talk about the ins and outs of business lines of credit. How can we get you more capital to go out there and expand your business, whatever business that may be? So again, any questions you have as we go through the presentation, please feel free to shoot them out there. I want to make sure that I answer a lot of questions. I'm going to cover a decent amount of content here. But anything that pops up, make sure that you put it in the chat. I'm looking forward to answering questions and educating you guys here about some business lines of credit. So what we're going to discuss today, we're going to tell you a little bit more about who MB Capital is. Who am I? My name's Nick DiFederico. I appreciate the Small Business Expo allowing me the opportunity to present to you guys. So we're going to tell you a little bit more about our company, what it is that we do, how we help clients. We're going to go into what I refer to as the funding toolbox and talk about unsecured funding, the uses, the types, how do we start to acquire it, how do we help our clients, and as we mentioned at the end, hopefully a good amount of questions and answers to give you guys some value. So my name's Nick DiFederico. I'm the lead funding strategist here with MB Capital Solutions. Pictured there with me is my partner and the owner of MB Capital Solutions, Eric Moss. Eric is our referral partner liaison. He does a great job of making sure anybody who, works with business owners, works with real estate investors, we're helping them, their clients get access to capital. So if you are on the chat and you're a CPA, I saw somebody said they're a CPA. If you're a business broker, if you're a hard money lender, a lender that just needs their clients to have additional working capital, definitely reach out to us. We host a referral partner webinar twice a month. I actually, in the link in the comments, I just posted a link. So if you want to learn more about becoming a referral partner, definitely check out that website. Sign up for our next referral partner webinar. Eric does a great job, kind of getting your clients in a position to get more funding and also create a revenue stream for you for sending over referrals. So definitely check that out. We help a lot of different types of individuals and, make sure that we're getting you guys capital and send up your clients the right way. So who is MB Capital? MB Capital, we started in 2009. Eric, way back in 2009 was a real estate investor working with a company that showed him how to acquire lines of credit. He started to use that model and build a business from that point to want to go and help other individuals. I actually met Eric back in 2010 when I was in the jewelry business. Eric was able to help me put in place $100,000 worth of lines of credit that I was able to kind of turn over and over again in that business. Fast forward to a couple years later, as the economy was starting to get better and, the jewelry business was just starting to fade out a little bit. I had a lending background and decided to make the jump and me and Eric partnered up. So, it was a natural progression. Even though we're located in New Jersey, we are a national company. We work with clients pretty much in every single state. So what we do is we specialize in funding for small business owners and real estate investors, getting you access to permanent lines of credit that you could use over and over again to help scale and grow your business. We've helped over 1,700 clients obtain over $60 million in unsecured funding. And really, our goal is to work with you to position you and your business for long-term success. We know that the more access to capital that you have, the more opportunities that present themselves, and the easier it is for you to take advantage of those opportunities. For most small business owners, entrepreneurs, what we are opportunists. So an opportunist that's not prepared to take advantage of an opportunity is really setting themselves back. So we like to make sure that we're helping position you the right way to, go out there and take advantage of opportunities. So I'm not going to dive too deep into the funding toolbox, but the funding toolbox is a concept that we came up with, after talking to, thousands of clients all across the country. Most people don't realize that they have a funding toolbox. They have a collection of tools that, whether they realize it or not, can be used in their business to be able to grow and scale. Especially for real estate investors, a lot of real estate investors we work with, a lot of coaches, consultants, real estate, education companies send us a lot of their clients. So that's why we kind of gear it a little bit towards real estate investors. But, between residential, commercial loans, lines of credit, credit cards, hard money, HELOCs, they're all tools to be able to use, deploy, to be able to grow our business, to get into more real estate transactions, to be able to do more deals and ultimately grow more wealth for ourselves. So if we understand that we already have a funding toolbox and that we have tools in there to be able to help us grow the business, it becomes a little bit easier. And that's really where we come into play in terms of coaching our clients to make sure that they know all the options that they have to be able to take advantage of those opportunities that we keep talking about. So what is an unsecured business line of credit? And the emphasis is on unsecured, because at the end of the day, the lines are backed by a personal guarantee. We don't need collateral. So we're not putting a lien against any assets. We're not putting a lien against a property. It's not based off of a project. It's based off of the strength of your personal credit, and it's based off the age of your business. So these revolving lines, are just backed by a personal guarantee. Like I said, they don't require collateral. And the best part is that they're in the name of the business. So it allows you to leverage the funds, use the funds for whatever working capital purpose that you need, but it allows it to not report back onto personal credit. So it keeps you bankable, lendable on the personal side, even though you may be using a good amount of money in the business. Since they are personally guaranteed, it's mostly based off of the strength of your personal credit file. And like I said, the age of your business. Most lenders, we're not needing tax returns. We're not needing financials. Now with, COVID hitting, some things have changed, and I'll get into that as we talk about the different types of lines of credit. But one thing about us is we're strategists. We work with lenders nationwide, small, individual, local banks, national lenders, large institutional banks. And where we really provide value for our clients is, knowing the products that are in the marketplace, knowing how lenders are approving clients, and knowing how you need to be positioned to acquire those products. So in working with us, we're not the end lender. We're not private lenders. I don't have a bucket of, money that I pick and choose who I lend out to. We really work on your behalf to position you the right way to maximize how much funding you can get based on, what your goals are. And that in a nutshell is what an unsecured line of credit is. Line of credit in the business name that is totally unsecured, not backed by any collateral, not pledging assets, just based off your personal credit and the age of your business. So real estate investor uses, I know there's a lot of real estate investors at the Small Business Expo. These uses are, for real estate investors, but then also for, your general business owner as well. So for our real estate investors who may be in the chat, the lines of credit are great for gap funding. we're getting into a deal and we may have a lender who's given us 80-90% of the purchase price and maybe some of the rehab funds, but you still need that down payment money. You still need the closing cost money. So leverage the line of credit so that you're essentially 100% funding a deal without having to use your own cash. Like I mentioned, down payment money, we need 10-20% to get into a deal. Leverage the line of credit. That's what it's there for. It's the same as cash. So I always tell my clients, we want to leverage as many tools in the toolbox before we get to cash, because cash is the easiest thing to spend and it's always the hardest thing to acquire. So the more we can use the tools in our toolbox before we get to our cash, the easier it's going to be for us in terms of operations. Rehab money, a lot of real estate investors, they may get hard money or private money, but if they can front the rehab cost off of a line of credit, it's just going to make their deal a little bit more profitable, as well as save themselves, higher interest and, potentially origination costs if they're having to pay, a percentage of the total loan amount in terms of a point, in terms of upfront fees. As I mentioned, 100% finance a deal. If we have a lender that is going to give you, 80% of the purchase price and you need that down payment money, leverage the line of credit, like I said, so that you're essentially 100% funding a deal without having to use your own cash. And then depending on the deals that you're doing, leverage the line of credit to fund the whole deal. I have many clients where over the course of time, we started with $100,000 and have built them up to have $500,000, $600,000, $700,000, $800,000 worth of revolving lines of credit in the business name, to where they can now self-fund a whole purchase. They can self-fund a whole rehab. They don't have to pay 10, 11, 12% private money or hard money interest rates. They can leverage their line of credit to be able to do it. Personally, that's what I do. Through the help of my partner, Eric, and, over the 12 years that I've been kind of dabbling as an entrepreneur, I've built up a little bit over $700,000 worth of lines of credit. And I also invest in real estate. So, I'm able to self-fund my deals. So I'm able to get into a deal quickly because I can cut a check and get into and close on a property quickly. I can, rehab faster because I don't have to wait for a hard money lender to come and inspect and issue draws. So the more we can build you up with working capital in your business name, the more beneficial it's going to be for you. Holding cost, people forget that, you have holding cost, whatever job you're working on. So whether you have a monthly mortgage payment, you have to pay contractors, you have to get permits, hire an architect, it all requires capital. So that's really what we're trying to do, is build you up with capital just to make sure that, you have those funds ready. Emergency funds. I always talked about having funds necessary and positioned in case an emergency popped up. And everybody always asks, well, what kind of emergency? And, it would always be, well, say a contractor doesn't show up, or say your business closes down. Now, look at the past 3 months and what we've been dealing with in terms of dealing with a pandemic and having businesses close and having jobs be kind of halted. I've gotten hundreds of calls from real estate investors over the past couple of months where, they can't move forward on their construction. They can't go get permits. They can't have a closing. And now they're in the middle of a property or in the middle of a project. And if they didn't have access to funds, things may have gone a different way for them. And I have so many different clients calling me because they need additional funds because either their hard money lender stopped lending, they're, now required to have more seasoning on their deals. They're now required to have more, holding money. So the past 3 months, if I've learned anything, it's that more than ever, as a real estate investor, as a business owner, as an entrepreneur, we really need to start to position ourselves to have that emergency funds. So many clients have reached out to us, at MB Capital saying, thank God I had that extra line of credit because I've been able to weather the storm. When we're allowed to come back out of the house, and I know a lot of states are opening up now, they can kind of hit the ground running because they had that additional capital to weather the storm. So emergency funds, a big part of it. And then working capital in general. A lot of business owners that I work with, they're either fronting the cost of inventory, they are purchasing a lot of inventory, and they just need float money. You have payroll, you have your monthly expenses. You may be in a business where you don't get paid for 30, 60, 90 days. So instead of feeling that tightness and waiting for, an invoice to be paid or funds to come in, you can float that off of a line of credit knowing that, the funds will come in, but you don't have to feel that tightness. I've been there before, in a couple of the businesses that I've owned where we'd have to wait for funds to come in, and it can get stressful to say the least, as you see a lot of money coming out and you're waiting for more and more funds to come in. If you have that kind of safety net of a line of credit and access to capital, it allows you to focus on work and not having to, focus on cash flow. So we know that cash flow, not necessarily just cash, but cash flow is king. So if we have the ability to kind of front and float money off of a line of credit, it gives us, peace of mind, and it's just going to help you on a daily basis go and operate your business. So building business credit versus building access to cash inside your business. I like to talk about this because, in the business credit market, you're starting to see lots of different companies pop up. You're starting to see lots of different individuals who claim that they're experts. And really, they may have done it themselves, but they haven't done it for other individuals. So building business credit versus building access to cash are two really different things. Building business credit is building up a business credit score, getting vendor trade lines, where MB Capital's focus is building access to cash inside your business. Listen, it's great to have a business gas card. It's great to have a business, account where you have a net 30, 60, 90-day account. But that doesn't provide cash for you to pay payroll, to pay health insurance, to use as down payment on a deal. So what we're going to talk about today is more of ways that we help our clients build access to cash inside the business. We're going to go over the couple different types of lines of credit and educate you on how we get them implemented for clients and what you really need to be doing to position yourself to acquire those. So types of UBLs, unsecured business lines. So the first type are your vendor lines, and that's sort of what I was talking about, like your store cards. So you may have a Staples card, Grainger, Home Depot, Quill. They're non-recourse, so you're not personally guaranteeing them. They're in the business name. You could use it if you buy supplies at Staples or Grainger. It's great to have. It helps you build up your DMB score and your Paydex score. If you're on this webinar and you don't know what a DMB score or a Paydex score, it's essentially like your credit score for your business. So not necessarily our Experian score or Equifax or TransUnion, but it's another business reporting company that will, kind of give you a credit score based on how you're paying business-wise. The downside to the vendor trade model is that you can only use and utilize those funds at those vendor locations. So if I have $20,000 to Home Depot, that's great. And if I'm a real estate investor, it helps me buy supplies and it helps me get materials, but it doesn't give me access to cash to be able to pay my bills, right? So, net 30, 60, 90-day accounts are also great. It's great to have a Quill account if I'm in retail and I need packages or, bags or supplies to, mail out my stuff. But again, those accounts you can't access to cash. The vendor trade model, we do not assist clients with this model. We talk about it, we educate about it. It is important in helping build up a DMB file. And depending on what business you're in, they could be very handy. Like I said, if you're in an office setting, it's great to have a Staples card to be able to order paper and order materials for the office. If you are a contractor, having that Home Depot card and account is great. Ideally, what we want to do is have those set up in the business name so that it's not reporting back on the personal credit. So, vendor lines are great to have. It helps you build up your DMB score. It's not a model that we focus on. It's a model that we educate on, but it's more of, you can do that on your own. You don't need us to be able to help you get a Home Depot card. You don't need us to be able to help get you a Staples card. So the next type of UBL is your checkbook line of credit. So there's really two different types of lines of credit when we're talking about unsecured lines of credit and more importantly, checkbook lines of credit. So the first is your traditional line of credit. Typically, what we need to see for a business to acquire this type of line of credit is 2 years in business and at least $350,000 in revenue. Most lenders are going to ask for tax returns for that traditional line of credit. So we might need to see 2 to 3 years of personal and business tax returns. It's a longer underwriting process, 30 to 120 day underwriting process. And typically what we're seeing is that, an average approval per line of credit for a traditional line of credit is somewhere between 10 to 15% of your revenue. So if you're doing, $1 million in revenue, you're going to get somewhere between $100,000 to $150,000 on a line of credit, as long as we have 2 years in business, we have the ability to show tax returns, we have decent revenue. Everybody always likes to ask, what are the interest rates on that type of line of credit? Currently, right now, interest rates are prime plus 0 to 4. So currently, prime interest rate is at 3.25%. So say you're approved at prime plus 1, you're paying prime plus 1%. So it's 3.25 plus the 1%. So you're approved at 4.25%. Most of the lines are interest-only payments while you're using the funds. So it's not really a big strain on cash flow. And your minimum monthly payments are somewhere usually between 1 to 2% of the balance. UCC filing, however, on that traditional line of credit is standard. Now, most people don't know what a UCC filing is. A UCC filing is, think of it as like a lien. We buy a property, we get a mortgage, the mortgage company is the first lien holder. Same thing here with the traditional lines of credit. We go to a larger bank and we get a line of credit, they're going to usually put a UCC filing on there. The downside to the UCC filing is it usually cuts off the ability to acquire any other lines of credit after that, because if another lender comes and runs your business and sees the UCC filing, they don't want to be in second position essentially. So I always tell clients, be careful about UCC filings because it can halt how much capital you can start to grow. One of the things MB Capital does is strategize around that. If you're in a position where we can get you a line of credit, we can always go to multiple lenders to acquire multiple lines of credit. So what we can do is we can actually, start with the lenders that we know don't require UCC filings before coming back to that last lender to acquire a line of credit that does require UCC filing. So it allows us to kind of stack up traditional lines of credit. The one thing I will say is in the current lending environment with COVID and coronavirus and the pandemic that hit, is lenders are being a little bit stricter around the traditional line of credit. Banks in general right now, they know what's going on in the economy. They understand what's happening with small businesses, so they're being a little bit stricter in lending out the traditional lines of credit, which is really what brings us to the streamlined lines of credit. Streamlined lines of credit are awesome. We implement a lot of streamlined lines of credit all across the country for clients. And typically what we need to see clients and how we need them positioned is 2 years in business. What's good about the streamlined line of credit is that we can use stated and projected income. A lot of the lenders, as long as we have decent personal credit, we have 2 years in business, they'll take projected and stated income to where we don't need to provide financial docs. We won't need to have full financial statements. We won't need to have full tax returns. And the reason for that is because with a streamlined line of credit, they're going to give us a line of credit somewhere between $25,000 to $100,000 per line of credit. So for them, it's a little less risky than that business owner who does $3 million in revenue and is looking to get a $350,000 line of credit. Where we get strategic is like the traditional lines of credit is we can acquire multiple of those streamlined lines of credit. And what I mean by that is, I'll give you an example of a client in Philadelphia that we just helped. We were able to get him 4 separate lines of credit, 3 for $50,000 a piece, and then a 4th one for $100,000. None of them had UCC filings on it. So we were able to get him, it took about 45 days Underwriting took a little bit longer during the COVID coronavirus pandemic, where typically it's a 7 to 21 day underwriting process. It did take a little bit longer, but within 45 days, we got him $250,000 worth of business lines of credit that he can now go use on his projects. He was a real estate investor doing fix and flips, and he was using all of his own cash. So he was doing sort of onesie twosies. He was doing 1 or 2 jobs a year where he would use all his cash on to do a deal, flip the property, wait for funds to come back, go do the second deal. Now that we actually got him $250,000, the one thing he mentioned before we got the lines of credit is that he had a ton of opportunity. If he had more money, he'd be able to take advantage of more opportunity. So now he's using the lines of credit and combining it with a hard money lender to do 6-7 deals at a time. He'll go from doing 2 or 3 deals this year to doing probably closer to 10 just by having the access to additional capital. Interest rates on the streamlined lines of credit, same thing as the traditional lines of credit, maybe a point or two higher, prime plus somewhere between 1 to 5. So prime interest rate again is at 3.25. So you're talking anywhere from 4.25 up to 8.25 interest only payments on the line of credit. I mean, even at 8.25, it's not a bad line of credit. It's streamlined. You haven't, had to provide documents. Most of the banks are not putting UCC filings on it. Some are. And for us as the strategic partner and coach in your, your team member, we're going to save those lenders that are putting UCC filings on at the last. This way we can acquire multiple lines of credit before we're kind of halting any funding. But the streamlined lines of credit is a great product. I have multiple. It's a good way to start to acquire funds to get in and, make sure that you're positioned to take advantage of opportunities. We help with these 2 types of lines of credit for clients all across the country. So no matter where you may be watching this webinar, if you're watching it later on, we can help you. There's clients that we have in Hawaii, California. We work with lenders nationwide. So if you have any questions about the traditional lines of credit, please feel free to let us know. The last type of UBL are credit cards. So we all know about credit cards, the ability to swipe, but where we're a little bit different, and because we work with real estate investors that need access to cash, and because we work with business owners that need access to cash, is that we focus more on cash convertibility of credit cards. And what I mean by that is the ability to liquidate credit cards into cash, put it into our bank account, and use it as working capital, the same as we would with a line of credit. Now, what's great about the credit card model is you can have a brand new entity. You can have an established entity. I can't tell you how many clients will come to me with a week-old, entity, but we're still able to go get him or her somewhere between $50,000 to $100,000 in credit cards. And the best part of it is we don't need financial documentation. We don't need collateral. A lot of times you don't even have to be on the business or as an owner of the business. You could be a partner in the business or a family member of the business. A lot of times we'll meet a business owner that credit's just not in the right position, but their wife or a family member may have better credit, and we can leverage their file to go get, $50,000, $60,000, $75,000 in credit cards in the business name. And the real benefit is the 0% introductory rate. So 0%, anywhere from 6 to 18 months on the credit cards. So think about the ability to use $50,000, $60,000, $75,000 either on one of our real estate transactions or in our business for up to a year and a half at 0%. It's a game changer. And for a lot of business owners right now who may not have gotten access to PPP loans or an EIDL loan and are dealing with cash flow problems right now, we're doing a lot of 0% credit card plans for clients all across the country. It gets them access to cash. You can still swipe a card. You can pay invoices. And really, we coach our clients how to use the initial 0% promotion as well as future 0% offers. So it's not just the initial 6 to 18 months at 0%. We're going to coach you on how to be able to utilize that long term and continue to get 0% offers. And what I mean by that is, a card, just just a couple months ago, as coronavirus hit, I took one of my 0% credit cards and I took $30,000 in cash off of the credit card. Now, I have a $30,000 balance on the credit card, but more importantly, I have $30,000 in cash sitting in the bank account. We didn't know where coronavirus was going, so I figured, let me just hold on to cash. So from a cash flow perspective, your minimum monthly payment while you're carrying debt on 0% credit cards is 1% of the balance. So for that $30,000 that I just liquidated into cash, my minimum monthly payment on it is $300. I didn't actually need the money, so I'm paying that monthly payment right out of the bank account that I put the $30,000 into. If at the end of the 9 months, I don't use any of the money, I'm just going to pay it back down to zero. And what's going to happen is, because I paid it back before the offer expired, the lender's going to give me another 0% promotion. Because when you utilize the 0% model the right way, they keep giving you 0% offers. And they do it for two reasons. One, they're a credit card company. They want to hold your debt. It looks good on their balance sheets. But two, and the real reason why you get 0% promotions is that the lenders know that the statistics show that about 91% of the people that utilize that feature screw it up. They either can't pay it back, they don't know how to pay it back, they can't transfer it to another card. So they just assume that if I keep giving you 0% promotions, at some point they'll be able to get, their interest on it. We coach our clients on how to use it the right way, not just short term, but long term as well. I have clients that use 0% credit cards to purchase properties. We work with a third party company that what they do is, anything that you can pay with a credit, or you can't pay with a credit card, they'll pay on your behalf, and then just charge your credit card. So if you need ways to liquidate credit cards, reach out to us. We can help get you set up with that. But, it's a third party company that they'll take an agreement of sale and they'll actually wire funds off of a credit card and send it to the title company for a closing. So like I had two brothers where we were able to get them each $75,000 in 0% credit cards. They use 0% credit cards to purchase a property in Philly for $110,000, all at 0%. So liquidated the credit cards, this third party company sent it directly to the title company. They showed up, closed on the property, $110,000 purchase. So their minimum monthly payment on their credit cards is $1,100. It's all going towards principal. And the best part is they'll have that property flipped in probably 6 months. Funds will come back. They'll be able to pay those credit cards back off, and then they'll be able to re-access it. I'm a believer in using a combination of 0% credit cards along with my traditional lines of credit, both for ease of use and, for cash flow purposes. Right now, I'm working on 2 properties, and I'm using a little over $200,000 in 0% credit cards and lines of credit. But when you look at all the money that I'm using, my blended interest rate at 0% plus my 4, 5, 6, 7% interest lines of payment, my blended interest rate right now is at 4.1%. So I can't go anywhere and borrow $250,000 for basically prime right now. So it's a good way to build up access, be able to leverage it, use it in our deals, and most importantly, have that access to capital. Block requirements. We talk a lot about credit data versus credit score. Clients will always ask, what credit score do I need? And I'll always say, we want around a 680. But I care more about your credit data than just the score. That credit score can be manipulated. That's a living, breathing thing. So I care more about the data. And what I mean by data, I mean, what's the age of your credit file? How many inquiries have you had in the last 6 to 12 months? Is there any derogatory information? What's your overall credit utilization? How many current trade lines do you have? What's the history of your file? We'll review all that for you and kind of create that custom game plan of the lenders that we're able to approach. So if you may have a 660 credit score, it doesn't mean you shouldn't reach out to us. We're going to strategize to get your credit profile in the most optimal position, so that we can have the most success and then minimize the impact that it has on personal credit. So definitely reach out to us. We can get you into a position Because there's times where, listen, with a client with a 770 credit score got less funding than a client with a 680 credit score, because the client with the 680 credit score just had more in-depth data on their credit file. So pros, and I'm going to move a little bit quickly here so we have a little bit of time here for some questions and answers. But opportunity money, access to capital, separation of personal and business. I talk about it a lot because I know how important it is. The goal is to eventually have as much business credit and capital as possible so that we can leverage the crap out of the money and it not impact our personal credit. Like I mentioned, I'm using a little over $200,000 worth of lines of credit, but not a dollar of that reports on my personal credit file. So I'm bankable, I'm lendable. When I do my refinance on the back of my BRRRR model, I'm in a position to, get funding. So we want to separate personal and credit. It helps you protect your assets. Most importantly, revolving. Use it over and over again. Use it, pay it back. It's sitting there ready to go for a second, third, fifth, 10th, 100th time. As long as we use it responsibly, it's not going to go anywhere. Cash flow efficient. You only have a payment on it if you're using it. And you have a payment based on the amount that you're using. So if you have a $100,000 line of credit, you're not paying on the whole $100,000 if you're only using $25,000 of it. So it's not like a loan, it is a line of credit. Diversification between multiple banks. The ability and the idea is to have multiple lines of credit so that banks compete for your business. We want to build you a marketplace of your own lenders so that if one bank were to close a line of credit on you, you still have the ability to go acquire and use more credit. Especially right now, I have clients that are calling me saying, oh, I had a cabbage line, but they cut my line of credit. If they were positioned with other lines of credit, they wouldn't be in a position where now they're scrambling for funds. Underwriting is normally 2 to 4 weeks, so it's not a long process. Competitive rates, easy to use, and it's not dependent on a deal. So it doesn't have to be, deal specific if you're a real estate investor. Some of the cons, banks' underwriting procedures may change over time. But that's, why working with a company like us is beneficial for you. Because we run so many applications on a given month for clients all across the country, we know banks' underwriting procedures, their requirements, how they're approving clients, and most importantly, how to go acquire the capital for you. UCC filing, which I did, talked about a little bit ago, depending on the bank, if a UCC filing is filed on your line of credit, essentially it halts any line of credit funding moving forward. As a real estate investor, you may only qualify for lines up to 100K. Because like we said, for a real estate investor, you may be looked at as a little bit more high risk. So a real estate investor is not going to get a $500,000 line of credit. But where we'll get strategic is, being able to acquire more than just one line of credit. Short-term use, it's not meant for long-term debt structuring. And what we mean by that is, don't use lines of credit to hold on to a rental property for 30 years. It's not meant for that. It's more for short-term use. We're doing a flip. We're either acquiring a property and gonna, refinance into a longer-term amortized loan, or if we're a business owner, we're using it and cash flow is going to pay it down. Variable rates depend on prime. So if you're approved at prime +1, you'll stay at the +1, but prime will fluctuate. Before COVID hit, prime was at 5.25. It's now at 3.25. So a lot of people actually got a chop in their interest rate on lines of credit. But if prime goes up, your interest rate will go up. Higher interest than a mortgage rate, like we said, prime plus 1, 2, 3, 4, 5. You're not getting it at 3%. But for what you're using it for in terms of working capital, it's very cheap money than going and borrowing private money. Clients we work with, we work with business owners of all types. So you name the business, I work with them. If you have working capital needs, payroll, new employees, health insurance, business expansion, you want to buy out a partner, just to have emergency reserve funds, we work with everybody. Beauty boutiques, a pediatrician who's looking to purchase a building and buy out his partner, we work with everybody. Real estate investors. Real estate investors, me, my partner, and a lot of the members on our team are real estate investors. So we have in-depth knowledge of real estate investing. A lot of the real estate education companies send us their clients because we know how to position them to go do deals. So if you're a real estate investor, you definitely want to touch base with us, and we're going to be able to help you get access to capital. I'm going to post a link for you to kind of reach out and see how we can get you pre-qualified. I'm posting that link now. If you want, you can fill out this form, and within a day, we'll get back to you and get you set up with a consultation to show you exactly how we're able to help you. Like our page on Facebook. Anybody who likes our page over the next 24 hours, we're going to enter you into a raffle to win a $25 Amazon gift card. So I'm also posting the link to our Facebook page. Go like our Facebook page. If you like our page within the next 24 hours, you'll get entered in that raffle. And then on Monday, we are going to, do a quick draw to see who wins that gift card. And now questions. I'm clicking over to the question and answers. So Uzman asked, if you have a fresh new business, how much credit can you get? It depends on personal credit filing, positioning. Typically, even with a brand new business, we're getting, our clients somewhere between $50,000 to $150,000 within 30 days, and then helping you grow it from there. And then also Uzman asked, do you need to show revenue to get credit funding for credit cards? No. We can use stated and projected income. We don't need to show tax returns or financial docs, especially for the credit card model. So, it is a nice model to get access to funds. Nina asked, is this business credit or personal? So we do both. Our ultimate goal is to get you positioned with business credit. However, sometimes we have to, start to build up personal credit to get you access to the business credit. Lenders want to see that, you're positioned the right way on the personal side. And a lot of times we have to put in place some personal relationships with banks before we're able to get access to the business funds. But we do both. Brad said, Nick, factoring is not in the toolbox. I own businesses that could have used fund growth had I known about. Would like to get your thoughts. Yeah, definitely we'll reach out, Brad. Factoring, I like factoring. If it makes sense, it can be costly. It's not necessarily one that I want to use first in my toolbox. The goal is to use some 0% credit cards, some lines of credit, cash before I kind of give up some revenue in terms of factoring invoices and paying a little bit higher interest rate on some of the factoring. But thank you for your question, Brad. I appreciate that. Kim asked, how can a person business with Chapter 7 get line of credit, Chapter 7 bankruptcy? Kim, it depends on the lenders that were included in the bankruptcy. And then we also do work with a third-party company that can remove bankruptcies as long as they're older than 2 years. So if you're interested in getting access to capital, reach out to us. We can definitely help you. And then this will be the last question before we kind of got to jump off here. If anybody's interested, we do have a booth set up. So go into the exhibitor hall, search MB Capital. Me and my team will be in the booth after the presentation. Come ask away any questions that we may not have gotten to. But Christelle asked, is a business lock considered liquid money? I'm interested in franchising in the future, and I see a lot of requirements of X amount in the liquid capital. Would a lock help with that? So yes, it is considered liquid money. You have to double check with whatever franchisee that you're buying with. We work with a lot of people that are buying franchises. We work with a lot of companies that broker franchises. So it depends on how the franchisor will look at your financials. But I have lots of clients where we're getting them access to lines of credit simply for purchase and reserve cost on their franchise. So great question. I appreciate you answering that question. And like I said, anybody that has any other questions, feel free to come visit us at our booth. Me and my team will be there. And I also just posted again the link that if you want to get pre-qualified and see how we can help you. Fill out that form and we'll get back to you within the next 24 hours.
Awesome. Thank you. We really enjoyed that presentation. Again, I want to thank AT&T Business for being our presenting sponsor. This webinar's recording will be available within 24 hours. You all will receive an email notification when it's available. It will also be available on smallbusinessuniversity.online. Thank you all for joining and stay safe.
Thank you, everybody.